last few days.
All right, now with that, let us go on with our conversation. And with me is Ken Gishinga and Tobias Olwenyi. Thank you so much for sticking with us. All right, now let us look at the interbank lending rate, interbank rate. And it seems that banks are lending to each other on a very high rate. And when you look at this, what does this mean to an ordinary Kenyan?
Well, the interbank is the avenue in which banks lend to themselves to meet their liquidity needs on a day-to-day basis. And you're right, it has been quite high. At some point, I think it even hit 17%.
Wow.
This is something that is typically around 4 or 5%. So it points to a crunch, a liquidity crunch, which speaks to a broader economy where there is also a liquidity crunch in the economy. So the expectation is for the MPC to be able to articulate the money supply in the economy. Why is there such a big crunch? Is it because we are spending so much money servicing debt, or is it because of another reason? So I think it's important that the MPC, being a monetary policy, speak about the monetary situation in the country in terms of the aggregate of money supply. Now, sometimes they have technical terms such as M1, M2, M3, M4. I think it's important they start giving very rich commentary on the amount of money supply needed in this economy to meet all our production needs.
All right. And now, Tobias, you'll contribute to this. And also, I had remembered you hadn't given your point on the plan B of us making sure that we get to the target of June 24th for the Eurobond. But first of all, you can just chime into this, and then now you can give us the plan B.
Thank you, Kevin. I think I'll agree with the Gishinga Ken that we are having a crunch. And for the interbank, it will be like a savior to the small banks, because I think most of them were almost getting out of business because of liquidity issues.
Yes.
But you see, at the end of the day, they are also helping to reach out with credit to ordinary people. So the moment that the interbank rate was rising each and every time, that will actually mean that the ordinary person credit accessibility and even the costs rises, and therefore the CBK are trying to, I think they have said that it's about 2.5%, not more than that.
Yes.
That probably will control the scenario a bit and will also open up more credit to individuals and also business, so that we can actually, it's more of a bit of expansionary approach to money supply, so that we are having something in the economy.
Okay.
Yeah.
All right. And now let's look at how we can make sure that by June 24th, 2024, we are able to pay the Eurobond.
Two things. One is we must be real to our fiscal discipline.
Yes.
Because I think we have been speaking a lot, but then we now need to be real in terms of how do we monitor our expenditure and the way money is being used from the public sector point of view. And two is the issue of production. We must go back to a way in which we can produce foods for ourselves, so that we are able to sustain ourselves. And in that case, we'll be having what to pay, and we can actually be able to manage the situation. Yeah.
All right. Thank you so much for that. Now, let us go to the MPC, the Monetary Policy Committee. First of all, we usually get the reports every month. The CBR rate is at this particular, maybe like where we are right now, 10.5%. The members who are constituted in the Monetary Policy Committee, do we have a knowledge of them? Do we, as Kenyans, know how the team is constituted? Because when it comes to the governor, we have clear a path. We know he's entered into office, he's going to take this long, he's finished office. Now we've never really known about the MPC. When it comes to the MPC, Ken, What do you think about the MPC? Because they come up with these figures, they use inflation in different, the food inflation, they also fuel, and then they say, okay, now the CBR rate is this. So just give us a perspective. What do you think about the MPC? And maybe you could be knowing the members, and you might even be one of the members. So please just tell us so that we understand where what really influences the number of the rates that we usually get.
Now that's a great question, Kelvin. The MPC, the Monetary Policy Committee, is the organ responsible for the conduct of monetary policy in Kenya. It was set up back in 2008 and replaced an earlier body that was called the Monetary Policy Advisory Committee. To your point, it's not very clear about the membership. Besides the governor and the deputy governor, if you go to the central bank website, you have no idea who sits on it, which is a remarkable departure from global standards. If you today went to the Bank of England, you'll see the entire Monetary Policy Committee, the members, their CVs, even their voting history. They'll tell you person A has voted to increase interest rates 5 times, to reduce 10 times. So your whole voting industry, history. If you go to the Federal Reserve, it's the same thing, the reserve in India. So in Kenya, it's been kept a secret. So it's not very clear about who is part of it, what's the decisions in terms of the minutes.
Yes.
And I've always said we need to become a bit more transparent in terms of even the minutes to be released on, was it a unanimous decision to maintain interest rates? Was it a split? Were there dissenting views? Almost the way we have the Supreme Court that always tells you that 5 members were for this and 4 members were against this. In fact, I say possibly after the Cabinet and the Supreme Court, the Monetary Policy Committee should be the most significant committee, because it really determines the money that circulates. So I think it's part of the reforms, and every institution has to undergo reforms, is to make it more transparent, make it more open, give us the minutes on who said what, was these unanimous decisions, because they do impact. The cost of credit impacts the amount of money circulating in the economy, impacts jobs, impacts businesses. So I really hope in their 5-year strategic plan, is part of that is really opening up for Kenyans to really engage with them a bit more.
Okay. Calls from Gishinga there to for us to be a little bit transparent when it comes to the committee. All right, Tobias. Let me also get your perspective on this, because the MPC, we usually get the statements. We usually receive the statements. It says, okay, the CBR rate for this month is this one, and then we move on with our lives. We never usually go back and look at, okay, and interrogate the whole of this idea, and how did they come up with this? What happened? What went through this and this and this? Because they usually mention that they used certain industries to make sure that at least they've come up with that. So let me get your points from on this.
Yes, Kelvin, MPC is a very important body in every functioning of a central bank of a country. Allow me, I come from academia.
Okay,
so we are serious on terms. when we talk of monetary policy, the main mandate that it has is to look at the money supply of the supply of money within the economy, and also to look at the inflation, which we use the consumer price index to monitor. So MPC is very important to every person that is in this republic, because it will actually affect their businesses in one way or another. Now, because of that sensitivity, we normally use a rate which is 1% of 1%, which we call a basis point. So every time the monetary policy sits down, they will actually say we have increased the interest rate with maybe 500 basis point, maybe 200 basis point. And because of that sensitivity, the basis points have to be really checked. The members must actually sit down, agree, talk, look at the economic fundamentals, and confirm that what they are going to tell the public will actually affect the economy positively or in what way. Yes. Concerning the constitution of MPC in Kenya, we have 9 persons, just like England. Mm-hmm. We have UK, we have 9 persons in the MPC. But the one for UK, you can see the persons that are there. If Dr. Tobias Olwenyi is there, he will be put that is one of the member of MPC. Yes. But in Kenya, you cannot see who is the member of MPC. You can only see there are 9. Yes. Of course, the chair is the governor of the central bank, and the deputy governor is there. There are some 4 people, technocrats in finance, that are appointed. We don't know their names. And then there are also 2 other people and the representative from Treasury. I think it's the CS from Treasury. Yes. So we have 9 persons, but we do not know who they are. That's the truth. When you look at England or India, you know who those people are. Mm-hmm. I would go with what Ken is saying, because you see the decision that they are making is very significant to the economy. We need to see who are they. I mean, what are they reasoning on, so that they can actually come up with the committee. But the decisions around MPC are very critical to the economy. Everybody is actually waiting whether it's going to be up, because that is the lowest possible cost of credit that we can have. When they say it is 10.5, then that means that is the lowest, that is the benchmark. So that whatever is going to be set will come from there. Yes. Yeah.
All right. Thank you so much for elaborating that very well and even bringing in the constitution. All right. Now, still on the CBR rate. For example, we are at 10.5. What if next time they review it and then we are at 12 or 13 or 14 or even 20 or even 15? What does this mean to the economy? What does this mean to the banking sector?
Well, that's an important question. And in essence, you're asking what's the policy transmission into the real economy. I would say it's a partial transmission, not a full transmission, because banks tend to, as I said earlier, to borrow from each other in the interbank window. So it's not every day that banks would go to the central bank to borrow. As Tobias has told us, it's really the cheapest cost of credit that the central bank is able to offer to banks. But if banks are able to meet their liquidity needs from their peers, they need not go to the central bank, which is the center of last resort. Now, because of that, if the central bank raises the central bank rate, we've seen it in the past. Banks don't necessarily have to increase their interest rates. They can choose to, but they don't have to, because sometimes it's not tied immediately with their cost of credit. Yes. So that's why in the past we've seen central bank increasing the central bank rate, but banks retaining, or even them reducing the central bank rate and banks going sometimes in the opposite direction. Now, this is a bit different in the West. In the West, where you have the benchmark rate, it's almost tied to your mortgage, for example. So if the Bank of England today raises the Bank of England rate, you feel it immediately. If you're a mortgage payer, it means even the loans that your bank has given you are anchored on that benchmark rate. And that's why you find central bank meetings in the West take a whole new dimension, whether it's the Fed or the Bank of England or the European Commercial Central Bank. It's a whole different scheme, because it affects people almost to the day, because now it means your mortgage will go up, so it means you'll have less money to spend on maybe entertainment and other things, and you really feel the effect. In Kenya, it's not quite that way, and that's why I keep saying it's a partial transmission. And the question that monetary policy experts should ask is, should we move towards the Western model, where you have a benchmark rate that's really linked to interest rates in the real economy, so that when the CBK speaks, actually you feel it almost instantly in your day-to-day. There are arguments for that, and there are arguments against that.
Okay. All right. Tobias, in the coming months, maybe we increase it, the rate is increased to a very big figure that we didn't expect. For example, 17.5 or 18.5 or even 14.5. What does this mean to the industry, the banking sector, to a normal Kenyan who wants to borrow from the bank? What does this mean?
First, increasing the rate by a higher percentage, as I told you earlier, we are talking about basis points. So and basis point is just 1% of 1%. So we are talking of 0.01 times 1. So if you increase it by very high percentage, you are actually doing damage to the economy, especially on private sector investment, which in turn affect basic individuals, ordinary individuals. So increasing it to a higher rate will actually be very dangerous. But assume it does, it will actually be affecting negatively the economy and also private sector investment. But going by what we have in our country, interest rates are not regulated. We are in a free market economy. So that means that as much as the banks might be having their own interbank rates and other things, there is a way in which the bank, there's signaling. By the fact that central bank has increased the benchmark rate, there is signaling which will actually lead to increasing the credit rates. So that is actually what's likely to happen.
All right. Thank you so much, gentlemen. I would like to get your final points and your final points as we even come to a close of the conversation. Can we start with you and then we'll finish with Tobias?
Well, I think again, it's to implore the leaders as we look at the economy to consider how do we strengthen the mandate of the Monetary Policy Committee. Yes, price stability is an important measure, but also unemployment. We need to look at how is our MPC suited to fixing unemployment, because when you don't have enough money supply in the economy, then also job creation becomes a problem. So how do we expand the mandate so that the MPC gives a commentary on inflation, but also gives a very good commentary on the state of unemployment in the country, so that the decisions are optimal across those two parameters.
Yes. All right, Tobias?
Yes, three key areas. One, as I mentioned earlier, fiscal discipline must be, we must work towards it, and in one honest manner in Kenya. Two is sustainability. We must try to go to a level where we are sustainable in our debts, in our productivity. Let's be sustainable. And then let us also read the private sector. What are we doing? Is it going to affect the private sector negatively? Because most of the jobs that we have in our country are informal, created by private sector. So if we take policies that are actually affecting our private sector negatively, then we don't expect our goose will be cooked, whichever, if we don't actually look at that. So I think that's what we need to do. All
right, thank you so much, gentlemen, for joining us on Business Today this afternoon. All right, we've come to the end of Business Today. My name is Kelvin Yakudi. Have yourselves a lovely weekend.